The median list price for new builds fell again during the first quarter, according to a new report from Realtor.com. Here to discuss, we've got Joel Berner, who is the chief economist at Realtor.com. Joel, great to have you here with us. Let's focus first on prices for new homes. What contributed to the decline in new median prices this quarter?
Well, the biggest thing, Brad, is that builders are building smaller and more affordable homes in a lot of the U.S. metros. In 26 out of the 100 largest metros across the country, the median price and the median square footage of newly built homes fell on a year-over-year basis. So while a lot of home buyers are looking around for a home that meets their needs and seeing that the existing home market just doesn't have anything in their price range, builders are delivering new inventory that fits that price consideration really well.
And so in the first quarter, existing home prices actually increased on a year-over-year basis, though they're still cheaper than new builds. What does that mean for buyers, and how is that influencing the decision-making process?
I think buyers are going to see that even though there are a lot more homes on the market right now, especially in the existing home space, with people starting to list homes that have been reluctant to in recent years, the buyers are still going to see price challenges on the market. The existing homes continue to increase in value, which is a great thing for homeowners, but difficult for first-time home buyers especially. So what we're seeing instead is that builders are offering the choices for prospective first-time home buyers that meet their budgets better than the existing home market does.
Is there a material difference for mortgage rates between new home buyers versus those who purchase an existing home?
There is actually. Not only do new home buyers save on the cost of home ownership because there's less maintenance to do on a new home, but we see that they pay about half a percentage point lower mortgage rate than existing home buyers. It's about 6.6 to 6.1 in 2024. And that's really interesting because what a lot of home builders are doing is offering mortgage rate buydowns as an incentive to close the deal. So builders or buyers of new homes can save on their financing as well as cost of home ownership by locking in these lower mortgage rates.
So tell us more about how tariffs could potentially impact the price and just the psychology around some of the new home builds.
Yeah, I think you're exactly right, Brad. There's two pieces to this. There's the direct effects on new builds. There's a 14% lumber on Canadian, or 14% tariff on Canadian lumber right now that's set to go up to 34% this fall, and that will simply add to the cost of a new home. That will bring housing prices up pretty directly, and not a whole lot of question as to the direction of the impact there. But where tariffs are a little more confusing and more interesting, I think, is in consumer sentiment. We've been talking a lot about it for months now as consumers are looking at the stock market, which has looked good in the last week or so as trade wars have kind of been walked down a little bit, but continues to be a little bit rocky, and as well as considering their own financial situation and their own employment situation, which tariffs are going to jeopardize. Because, you know, the only thing that really pins up the housing market is the labor market. So if people are afraid of losing their jobs, it's going to impact the housing market. It's going to bring down housing values and going to slow home sales even more than they already have been.
Wow. Okay. And so as you're reading through the employment situation and the labor market more broadly here, what are your kind of best anticipations around what that could signal for the home market for the rest of this year?
Yeah, it really depends if these tariff effects are going to be felt in the labor market statistics that come out already or not. I think there's a lot of uncertainty in the market. There has been over the last couple months, and that could drive companies to slow down their hiring, could lead companies to start layoffs. It could have a negative impact on the labor market. But if this was really all just posturing and we're kind of pulling back from some of these extremely high tariffs that had been put in place and now settling somewhere a little bit more manageable, then we might get through this tariff situation without a major impact to the labor market, which is what we're all hoping for.
With that in mind, we have a Fed that is very data dependent and has signaled that it's not going to be too quick to move on rates unless the data is specifically spelling that out. You're shaking your head. What's going through your mind as you hear the comments from Fed Chair Jay Powell and the committee?
Yeah, I think the Fed's doing the right thing. They're not going to overreact, not to 1 month of data, not to one policy decision. They're going to move slowly and take this as a whole picture. And I know that some people, some very prominent people, are a little bit critical of the pace at which the Fed decides to move. But until we get more information about how all of this economic activity is making its way into everyday Americans' lives, it would be foolish to make large, drastic decisions before plenty of data has come in and and we're seeing how the labor market has really shaken out.
Yes, that one prominent figure, I believe, calling Fed Chair Jay Powell a, quote, fool. And we will continue to see how Fed Chair Jay Powell just continues to navigate, perhaps keep his blinders and the team around him focused on the mission here. Joel, thanks so much for the context and the insights. Appreciate it.
Thank you, Brad.